Hello viewers, welcoming to you all through Accounting Equation Academy channel. So today I am presenting us on the topic deductions out of gross total income under section 80 CCE. Deduction out of gross total income under section 80 CCE available to an SSC from the gross total income. So an SSC can claim deduction under this section 80 CCE on his contribution falling under section 80C, under section CCC, 80CCC and under section 80CCD subsection 1, but shall not in any case exceed rupees 1,50,000. This is the statutory limit. So the aggregate deduction under section 80C and 80CCC and 80CCD subsection 1 together, it cannot be more than 1,50,000, or in each individual case, like only under section 80C the same amount 1,50,000, or only under section 80CCC same amount 1,50,000, or under section 80 CCD subsection 1 rupees 1,50,000. In individual case it cannot be more than 1,50,000 deductions, or in all together when we add all these three sections, so the amount cannot be exceed rupees 1,50,000. And here one, so only an individual and HUF are eligible SSCs in the case of section 80C, and only individual SSC is eligible under section 80CCC and 80CCD subsection 1. That means Hindu undivided family is not eligible to claim deduction under these two sections, but under section 80C both Hindu undivided family and an individual SSC are eligible to claim deduction out of gross total income, that is section 80. Here the aggregate amount of deduction excluding employer's contribution. Employer's contribution is not taken into account while calculating this 1,50,000. And here 80CCC here deals with contributions for pension of an amount to life insurance corporation or any other insurer to effect a contract of annuity or pension. The amount of deduction available is rupees 1,50,000. That is, I told you that in individual section, that is 80C or 80CCC or 80CCD1, in individual case it is 1,50,000, and when it is aggregated, even then it is 1,50,000 is the maximum limit for deduction from the gross total income. Similarly, here under section 80CCD is also given here an individual. Here an individual, that means not an HUF, being employed by the central government or employed by any other employer or self-employed. So here this being employed by the central government as well as state government also. Here state government or employed by any other employer, employed by any private company, public limited company employees, it is talking about that, or self-employed person. Here it is talking about the entrepreneur who are doing their own business, and this is the self-employed person, and who has deposited any amount in notified pension scheme. Notified pension scheme is means that the central government has notified there are certain pension schemes. If an SSC contribute to that notified pension scheme, then only the said amount is eligible for deduction. And here and here by the central government, including Atal Pension Yojana, deduction shall be allowed to the extent of rupees 1,50,000 under subsection 1, that is section 80 CCD subsection 1. The deduction to be claimed as follows. Here the rules for claiming deduction. Here the amount of deduction: employee's own contribution or 10% of salary, whichever is less. Under section 80 CCD subsection 1, employee includes central government, state government, or of any other employer. Under this section 80 CCD subsection 1, deduction is also available for self-employed person if amount is deposited in NPS during the previous year. Person's own contribution to NPS or 20% of gross total income, whichever is less, is eligible for deduction. Since he is a self-employed person, he is not a salaried person, and in this case the eligible amount for deduction under section 80 CCD subsection 1 is 20% of gross total income or his own contribution, whichever is less. Now it is talking about the section 80 CCD subsection 2 is about the employer's portion. So till now it is covering of employees contribution. This is covering employees contribution. Now employer's contribution is given under section 80 CCD subsection 2. This section deals with the employer's contribution to NPS, contribution of employers to NPS or 10% of salary, whichever is less. So this contribution amount is excluding in above section. So this is a separate deductions available. 10% of salary shall be replaced by 14% of salary if the employer is central government or state government. Apart from this, there is an additional amount of deduction if the amount is contributed or deposited in NPS only, in NPS. So this section has granted additional deduction up to rupees 50,000, and this section is 80 CCD subsection 1B. It is granted additional deduction to the depositors in addition to maximum deduction of rupees 1,50,000. 50,000 shall not be allowed in respect of the amount on which deduction has been claimed and allowed under section 80 CCD subsection 1. So if the amount is already claimed under section 80 CCD subsection 1 and the same amount is not eligible for deduction under section 80 CCD subsection 1B. So this is an additional amount. So the same amount cannot be claimed under section 80 CCD 1 and under section 80 CCD 1B. Two separate amounts. And the salary here, 10% of salary, 14% of salary for calculation. So here salary means basic salary plus dearness allowance if under terms of employment, if it is a part of salary, then plus commission if paid at a fixed percentage of turnover achieved commission. is given in the question. So then for the salary purpose we have to take three elements for calculating either 10% or 14% salary. So to explain this fact, this section, here one illustration is taken. So on your screen, illustration is on your screen. So Mr. Sharma has joined a new job in April 1, 2022. His particulars of salary for the previous year 2022-3 are as under. Basic salary rupees 50,000 per month. Dearness allowance is rupees 40,000 under the terms of employment. That means it will come while calculating 10% or 14% of salary. And commission received 50,000 on turnover achieved by him. Medical allowance is given rupees 5,000 per month he is receiving. Lunch allowance rupees 2,000 per month he is receiving. And thereafter Mr. Sharma, who is an employee, contributes 15% of his salary towards the national pension scheme, and a similar contribution is made by his employer. It means both employer and employee contributing 15% of salary in NPS, new pension scheme. In addition to this, his investment, this savings, and he has some other further savings and investment. So Mr. Sharma has other savings and investment. His contributions to recognized provident fund rupees 70,000 per annum. Life insurance premium paid during the previous year rupees 50,000. Then investment made in NSC during the previous year rupees 20,000. Now here question is given that compute his taxable income for the assessment year 2023-24. If he is assuming that if he is a private sector employee, and then if he is a government employee means it may be the state government or central government employee, then how his total income or taxable income is calculated. With this problem, what are the deductions to be claimed? Now step by step. So here the solutions. Computation of taxable income of Mr. Sharma, a resident individual, for the assessment year 2023-24 relating to previous year 2022-23. And it is given in the question that if he is a private sector employee, then how his taxable income shall be computed, what will be his taxable income. Now basic salary is given 50,000 into 12, 6 lakh. Dearness allowance for 40,000 into 12 months, and commission achieved on turnover. So it is one time 50,000, and medical allowance 5,000 into 12 months, 60,000. Lunch allowance 2,000 into 12, 24,000. And Sharma's contribution to NPS of 15% of salary. So the amount 1,69,500 it is worked out, and it is shown under working note number 1. And similarly, employer's contribution to NPS of 15% of salary, matching amount contributed by both the employer and employee. So here same amount 1,69,500. First we have to add this amount of employers and employee while calculating gross income from salary, and thereafter under chapter 6A, that is under section 80, we have to claim deduction. First you need to add this amount in gross income from salary, and subsequently it is eligible for deduction, and on the basis of the provision that is explained. Okay, here the first amount we have to add this 1,69,500, and this is the employer's contribution to NPS 1,69,500. So this is first we have to add to salary income. Then this is after adding this, it is here 15,53,000 is the gross income from salary, and standard deductions here section 16 subsection 1a 50,000. And net income from salary, since Mr. Sharma has no other heads of income and it is his gross total income, that is net income from salary or gross total income. So and then chapter 6a has given the various deduction, and that deductions we have to claim here under section 80C to 80U. The deductions are available. So let's see what are the sections applicable under this solution and the amount which are given, which are falling under which section. That it is given clearly under section 80C, the items under section 80CC C and under section 80CCD subsection 1. So let us first complete the employees portion, that is Mr. Sharma portion, eligible amount for deduction. So under section 80C working note number 2 is given, the total amount is 1,40,000, and employees contributions to NPS or 10% of salary is eligible for deduction since he is a private sector employee. And here we have to write down the qualifying amount 1,13,000, which is the 10% of salary, and salary for this purpose basic plus DA plus commission, and basic is 6 lakhs, DA is DNS allowance is 4,80,000 and commission is 50,000. So when we add these three figures, so you will get 11,30,000. So 11,30,000, 10% is 1,13,000. This is the eligible amount, qualifying amount, but subject to maximum is 1,50,000 only eligible for deduction. So 1,40,000 is under section 80C. Under section 80C given in the question that life insurance premium, contributions to recognized provident fund and investment in NSC. So these three items when we add together, so it is 1,40,000 and 40,000. So that means from here under section 80CCD subsection 1 only 10,000 is available, 1,40,000 plus 10,000, 1,50,000 this is. So from here 1,13,000, so it is taken only 10,000 because the 1,50,000 is the maximum deduction under section 80CCE. In the beginning I explained you under section 80CCE all together. So under section CCC 80CCC amount is not given, then under section 80C plus 80CCD subsection 1 together it cannot be more than 1,50,000. Here this is the, so here subject to maximum under section 80CCE is 1,50,000. And now here under section 80CCD 1B is additional deduction, that is maximum rupees 50,000. So it is a Mr. Sharma total deposit under section 80CCD subsection 1B amount deposited in NPS, it is the 15% of his salary. So 15% of salary is 1,69,500, and out of this 10,000 is deducted here under section 80CCE. This is the 10,000, it is included here, this 1,50,000, though here it is written 1,13,000 but only 10,000 is eligible amount, and this 10,000 is taken here 1,40,000 plus 10,000 and it becomes 1,50,000. Next here this is the 10,000 and the amount balance is 1,59,500, but additional deduction it cannot be more than 50,000. So 1,59,500 amount is not eligible for deduction Out of this, only 50,000 is the maximum deduction. This is an additional deduction which is given under section 80 subsection 1b. So it cannot be more than 50,000. It can be less than 50,000 but can, or equal to 50,000, but cannot be more than 50,000. This is the limit. And now under section 80 subsection 2, it is employer's contribution. Employer's contribution, that is the 10% of salary, and he is a not a government employee, he is a private employee, so he is eligible for deduction under section 80 subsection 2 is only 10% of salary, that is 1,13,000. And when we deduct this amount, 15,03,000 minus 1,50,000 minus 50,000 minus 1,13,000, so the balance is 11,90,000. This is your taxable income. So net taxable income is 11,90,000. Working note is so calculation of national pension scheme. Here salary for this purpose is taken. This is already explained you, 11,30,000. And then Mr. Sharma contribution 1,69,500, that is 15% it is given, and employers also 15% similar matching contribution 1,69,500 of salary. But here eligible amount of deduction is 10% of salary. It is claimed as deduction in section, but whole amount is not available for deduction because under section 80C has covered some amount, so balance amount shall be taken from here, 1,13,000. This is the eligible amount, and equal amount of contribution of employers is also same, 1,13,000. Now here under total amount eligible for deduction to Mr. Sharma under section 80CCE, that is under section 80C plus under section 80CC plus under section 80CCD subsection 1. But here under section 80CC information is not available with us, it not given in the question, so it is considered as 0, and 1,40,000 plus 10,000 is only 1,50,000. So out of 10% of salary eligible, that is 1,13,000, only 10% is 10,000 is taken. Now here under section 80C calculated amount calculated, this is contribution to RPF plus life insurance premium plus investment in NSC, 70,000, 50,000, 20,000, 1,40,000. So here deduction of employer's contribution under section 80C(2) if he is a private employee, 10% of salary, 1,13,000. If he is a government employee, 14% of salary, that is 1,58,200. So this is the solutions is prepared taking if employee is a private employee, private sector. Now I am giving you for your practice, if the employee is a government employee, then what will be his taxable income. So the government employee under section 80CCT subsection 2, the amount which is given, you have to replace that amount by 1,58,200, and the rest of the things are remain same, and only you put the value 1,58,200 in section 80CCT subsection 2, and all of you practice it. Write in the comment section what is the taxable income you are getting after considering if he is a government employee. Well viewers, thank you very much.